The top business stories from Sky News on Budget Day. A budget for growth. The Chancellor says his tax cuts will get the economy back on track. I'm at a family-owned company which hires out construction equipment to assess the budget's impact on business and the economy. Plus, did the budget move the financial markets? Are we finding out? Good afternoon, this is Business Live with me, Ian King. We're live from Ipswich. The Chancellor called it a budget for long-term growth. Labour said the government was unable to generate the growth the country needs. There were no rabbits out of the hat. The 2p cuts to national insurance was widely trailed and follows a previous 2p cut announced in the autumn statement. On the economy, Jeremy Hunt said tax cuts were possible because of the progress made in bringing down inflation, with forecasts suggesting it will fall to the target level of 2% within months. The UK economy is expected to grow by 0.8% this year and by 1.9% in 2025. Well, let's have a look now at some of the main business measures announced this afternoon. Well, Jeremy Hunt has unveiled a cut to capital gains tax in a boost for landlords. The Chancellor said the higher rate of profit of capital gains tax would be reduced from 28% to 24%. He extended the oil and gas windfall tax for one more year, but he said that the energy profits levy would be abolished should market prices fall to their historic norm for a sustained period of time. And a new British ISA will allow £5,000 investments in UK firms on top of the existing £20,000 a year ISA allowance. Well, joining me now is Richard Hughes. He's chair of the Office for Budget Responsibility, whose forecasts, of course, underpin the Chancellor's thinking. Richard, good afternoon to you. You've been quite optimistic in terms that you've raised your forecast for this year, next year, and for 2026. What's informed those upgrades?
So growth was disappointed last year. In the last two quarters of 2023, the economy stagnated and slightly contracted. We were expecting growth of last year, but we have revised up our forecast for growth going forward. That's on the back of falling interest rates as well as falling energy prices, which should support a stronger recovery in economic activity over the next few years. But over the long term, by the time we get to the fifth year of our forecast, actually our GDP forecast is largely unchanged from what you saw back in November.
What I thought was particularly interesting, though, was that you seem way more optimistic now for next year in particular, 2025, than either the Bank of England or indeed consensus city forecasts.
I think that's right. It's partly driven by the fact that the interest rates are expected to come down quite sharply over the rest of this year, if you look at market expectations. It's also driven by a big fall in energy prices in recent months, which means that people have got more spending power they can use to take out to the shops, and that supports a stronger recovery in economic activity over the next few years. Our forecast is a bit more optimistic than the consensus, significantly more optimistic than the Bank of England, but there are other forecasters who are even more optimistic than us.
Obviously, the government has had very little headroom, to use the sort of the jargon that has become so widespread around these events. And that's dictated essentially by your forecast for the net debt position way out in 2028 to 2029. How comfortable do you feel about that?
Look, our only power is to actually produce forecasts of the economy and of the public finances. The Chancellor's in charge of £1 trillion worth of revenue and £1 trillion worth of public spending. All we do is forecast whether his policies for tax and spending put him on course to meet the objectives that he set for himself, which is to get debt to fall as a share of GDP in 5 years' time. So our only power is to do a forecast. What the Chancellor does with tax, what he does with spending, and actually what targets he sets for the public finances are all down to him.
Exactly, but I guess my point is it really possible for anyone to know what the government's net debt position is going to be way out in 2028, 29? I mean, so many global events, as we've learned in recent years, can knock those forecasts even a little bit marginally off course.
That's definitely right. And the £9 billion of headroom that the Chancellor sets aside against his target of getting debt falling in 5 years' time is a tiny fraction of the error, not just around our forecast, but around any forecast looking out that far. Shocks can happen. The economy can grow more slowly or faster than we expect. The interest rate outlook has changed dramatically over the last few years. And even since our last forecast in November, we've seen interest rates change by half, 0.75% of GDP. Even those kind of small changes can make big differences to the amount that governments need to borrow in 5 years' time and whether debt is rising or whether debt is falling.
One thing that I thought was particularly interesting in your report, Richard, was that you said that labour market inactivity post-pandemic has been far more prolonged in the UK than previously anticipated. What kind of evidence has prompted you to say that?
So we saw a big rise in inactivity in the aftermath of the pandemic, and then it started to turn around and improve over the months after that. More worryingly, in the last 6 months, we've seen inactivity start to rise again. It now stands at around 700,000 people out of work compared to where we were before the pandemic. And I guess most worrying is that the largest group and the fastest rising group within that is those who are inactive because of long-term sickness. And so the danger is that those people are out of work for long periods, possibly until they reach retirement age. And that's a big loss to the workforce and something which is one of the things which drags down on our growth compared to other factors which are pushing it up.
Now, the Chancellor made a quite playful comment in his speech about the OBR having found its inner laugher, pointing out that this cut in CGT on household properties will stimulate more growth. If that's the case, then what could one say about an overall cut in the top levels of stamp duty?
All right, so we're not allowed to forecast alternative policies. We only take the policies the government has given us. This cut to CGT, we do think actually brings forward lots of property transactions into our forecast period, generates lots of extra revenue from CGT as well as from stamp duty. That helps to boost the revenue over the next few years. It tails off to smaller numbers by the time we get to the 5th year of our forecast. But we do expect a big behavioural response to this tax change because it does reduce the cost of undertaking those property transactions.
OK, Richard, enormously busy day for you today. We do appreciate you spending the time to chat to us. Thank you.
Thank you.
Well, we've been here at the home of True 7 Group all day. It's a family business just outside Ipswich, which deals with plant and vehicle hire, demolition, earthworks, concrete and recycled aggregates. This morning, I spoke to the group's Chief Financial Officer, Alec Bird, about what he wanted to hear from the Chancellor in his budget speech. And I'm very pleased to say Alec is back with me now. Alec, what do you make of it all?
Well, I thought it was quite a mixed event, to be honest with you. I think there were some nice highlights in there, but some missed opportunities as well.
You were very excited when we thought we were going to get an extension of full expensing to leased and rental equipment, and then it looked like it's not going to happen straight away.
Yes, he did say when they could afford it, so we'll see when that is. As ever, the devil's in the detail. Yeah. But it's nice to see that the industry's managed to make its point.
Yeah, I mean, Alec, that would make a big difference for your business were that to come to pass, wouldn't it?
I think so, and as we mentioned this morning, there are a lot of construction businesses out there who rely on people like us to provide them with their machinery, and the more that we can invest in it, the better it is for UK construction.
What did you make about things that were missing? I mean, there was very little about the housing market, for example. Not that much on skills.
No, so we're really proud of what we do here on skills with our apprenticeship scheme. We've got over 5% of our workforce in that formal training, and we'd like to do more. And there are sections of the population who need to change roles, where they be ex-forces or they be former sports people that we'd like to attract to our business. And I heard nothing to support us in doing that today.
Yeah, I mean, there wasn't anything really on getting first-time buyers onto the housing ladder, which presumably is something that would drive business for you.
I agree. I think it's well known within the sector that if you can get that first move underway, it helps everything down the chain. Heard very little about stamp duty. Concerned that the thresholds may be reverting. We'll have to see what the detail says. And again, no particular support for mortgages. So it feels as though that firepower's been used on the national insurance cut instead, which is good, puts money in people's pockets, but perhaps there could have been a bit more thought and care around the industry.
Yeah, I mean, if one looks at the OBR growth forecast, I mean, I know you're an ex-banker, so you'll be into the weeds on this more than most. I mean, the OBR was relatively optimistic. I mean, it's upgraded its forecast primarily because of the interest rate outlook being somewhat less aggressive than it was, and also the inflation rate proving a little more benign as well.
Yeah, which is welcome, isn't it? But unfortunately, I think all that headroom is so far out, it's difficult to know if we're talking about reality or fantasy. I think what it's done is it's helped the Chancellor today to give a little bit more away. Whether that's sustainable or not, we'll just have to wait and see.
Yeah, one of the interesting moves around SMEs was that he's raised the VAT threshold, so that lifts some SMEs out of paying VAT, or charging VAT. Will that affect any of the businesses that you deal with?
I think some of the local businesses, some of the smaller businesses, that will give them some modest help. I think the obvious point to make is that still tracks far behind where inflation has taken prices, so it's a real terms cut, actually, to the VAT threshold, and to be honest, it seems to me that it creates a headline, but it's minor tinkering.
What about the freeze in fuel duty? I imagine you are a very, very heavy buyer.
We are, yes. We do our best to minimise that. We run a number of hybrid machines. We work really hard on those travel distances to make sure that they're short. We run Euro 6 engines and Tier 5 engines in our plant and our lorries to really make sure we're making the most of that fuel consumption. Not to say about driver training. But, yeah, we're a big buyer of fuel, and that freeze is very welcome.
Very briefly, Alec, we were talking earlier off camera about grid connectivity, and you were saying that was a real issue here. I mean, the Chancellor did refer to it at one point. Did you take any optimism from that?
I think there is billions of pounds to spend across the country in order to upgrade the network, and particularly in locations such as ours, in order to deliver that power efficiently to that next generation of vehicles and machines that are coming. And I think, unfortunately, as things stand, that money's not available, so we'll have to see what happens there.
All right, Alec, great to see you this afternoon, and thank you to you and all your colleagues for hosting us today. It's much appreciated. Thank you. Well, Alec was one of the local business people that I was speaking to earlier on this morning. Another was Malcolm Moore. He runs a business called Frugal Pack, a business that we featured a couple of times in the past on Sky News, and they make recyclable packaging. And Malcolm rejoins me now. Malcolm, good to see you again. So your marks out of 10 for the Chancellor?
A little bit of a non-event for us as a smaller business, I'm afraid to say. I think it's great to see the child benefit come through for families that are needing that. Confirmation of the national insurance for everybody is great, puts money in people's pockets. We did say this morning, I hope it's not at the cost of services and various things. But when it comes to smaller businesses, it was a little bit lackluster for us. We mentioned this morning R&D tax credits, nothing about that.
Yeah.
I've got to say, we're politically agnostic, but we had Rachel Reeves in Ipswich last week, talking to her, and she had an answer to that question, I have to say. So, really? So quite encouraging.
So, I mean, that's clear blue water between Labour and the Conservatives. Then.
Well,
what's she offering you?
To be fair to the Chancellor, he hasn't spoken to me, so it's what you see in the budget. But frankly, there was nothing in the budget that dealt with innovation for small businesses. There was nothing in the budget that dealt with investment to allow our investors to be a little bit more proactive, if you like. We're a young business, we're post-revenue, but we rely on investment in the company. I sound a little bit whiny. I mean, there were some good things in there, and it's all longer term, but trying to keep the ship afloat in a difficult environment. We could be profitable tomorrow and take some advantages of the tax, but then we'd stop innovating, and therefore, you know what happens. Yeah,
you've got to innovate or die, as I believe a former Prime Minister once said. I mean, obviously, you supply the drinks industry. I mean, you must have taken some satisfaction from the fact that there's been a freeze on alcohol duty.
Oh, certainly. It's a welcome respite for the industry. Again, we talked this morning about could have done a little bit more on rates for hospitality. Clearly, there has been something done, but a full holiday could benefit that part of the industry. But from a retail perspective, again, good respite for them. And we've seen Aldi just come out and announce today the launch of Frugal Bottle. First time own label Frugal Bottle's been launched in the world, actually. So very encouraged by that, and nice to see it's going to be at the same price that it was due to be. So encouraging.
I mean, there's an awful lot of speculation that there may be yet another fiscal event between now and the election, whenever it is. I mean, what would your message be to the Chancellor were he sort of taking a 5-minute cup of tea break and tuning into Sky News now?
I'd play back his message, take risk, work hard and innovate. That's what we do. But in order to do those things, we do need some support from the government, whoever that may be.
Yeah, I mean, that was the thing. He talked an awful lot today about the need for businesses to invest more, but you were really saying you didn't get anything in this that would encourage you to do so.
No, we will carry on. We know how it works, but for companies like us that are trying to create something new and frustratingly in the green space. So whilst there was talk of green initiatives, it is at the higher big business, nuclear power. We're not quite there yet.
Which is massive for this region because, of course, Sizewell C, yeah.
Very important, but we're driving low carbon into in everything that we do. But to access some of these grants for younger companies is difficult because clearly they're always looking for the returns. And that's right, but we can deliver that. So we just look for a little bit more broader thinking. Take risk.
Yeah. Very briefly, Malcolm, what are your hiring intentions for the rest of the year? Will what you've heard today encourage you to hire more people?
Certainly, we've got to. I mean, we're growing, we're expanding significantly. We've just announced a machine sale into Australia. So most of our business is abroad, and we need people to come in and support. So we're currently looking for engineers if anybody's listening and wants to join Frugal Pack.
Great stuff. Well, hopefully someone's heard that. Malcolm, great to see you again, and on your home turf as well. Lovely to catch up. Thank you. Just going to break into the business news momentarily to bring you some breaking news now. And we can tell you that the government has suffered another defeat in the House of Lords on its Rwanda bill. That is the sixth defeat for the government so far on its Rwanda bill. My colleague John Craig, our political correspondent, was saying the other day he still thinks this bill will pass through the Houses of Parliament, but clearly there are many a slip between cup and lip. So that's breaking news. The government just been defeated for the sixth time on its Rwanda bill. Well, still to come here on Business Live, live from Ipswich. We'll be taking a look at how the markets have reacted this afternoon to the budgets. Don't go away.
Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before?
Yes.
Cheers. We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Well, let me tell you about the market reaction today to the budget. On the foreign exchange markets, well, it looks like it's a day of dollar weakness, to be honest, more than anything right now. Sterling up nearly 2/5 of 1% against the greenback. But as you can see at the bottom of the screen there, the euro is up 0.5% against the dollar. The sterling off just under 1/5 of 1% right now against the single currency. Well, over in Europe, mainland Europe today, this is how the markets have finished up. They're largely a positive session in continental Europe. All of the main equity indices in positive territory, led by the MIB in Milan. Over on Wall Street, similar story there. All of the main equity indices have opened to the upside this afternoon. I think we can show you the Nasdaq. Yeah, that's up nearly 0.9 of 1% just now. And that's partly because one of the main gainers today is Palantir Technologies. That has risen by more than 4% on a contract win from the US Army. To the downside, a couple of the retailers are in the wars. Foot Locker is off some 24%, while Nordstrom is currently some 13% lower. It warned of falling sales this year. But of course, the main event as far as UK viewers will be concerned, of course, today will be what happened in the London markets. I mean, the FTSE often pretty oblivious to what happens on budget day, to be honest, but the FTSE is nonetheless finished up just over 2/5 of 1% higher. Among the gainers today in the main index were airlines. Surprising that, given what the Chancellor said on APD, perhaps. House builders and energy companies. IAG, the owner of British Airways and Aer Lingus, that finished up reasonably strongly, up nearly 4.75%. I don't think that was anything to do with APD. I think that was more supportive broker comments at play there. Among the house builders, Taylor Wimpey, the UK's leading house builder by stock market value. I think that finished up really in the end only 0.1 of 1% high. It was up a bit earlier on. Some interesting moves outside the FTSE. A lot of action there of late, a lot of takeover action in particular. Premier Foods has risen by 11.5%. That follows a trading update. Well, somewhat appropriately, given that I'm at a plant and construction hire business this afternoon, the building materials group Breedon, company whose founder we've had on this programme many times in the past, that has risen quite sharply on news of a US acquisition. Among the fallers, well, the big event in terms of corporate updates today in the FTSE 100 was Legal & General. Full-year profits came in below market expectations, the shares finishing nearly 0.9 of 1% lower just now. Over on the oil markets, I can show you where a barrel of Brent crude has been doing this afternoon. Currently trading 2% higher. I think that's the best level for about a week for Brent crude. Currently changing hands at $83.67 a barrel. Well, joining me this afternoon is Lucy Coates, Investment Director at JM Fin. Lucy, good to see you as ever this afternoon. Let's start with Legal & General. I mean, that was the main corporate update today. Numbers a bit shy of expectations. Not an easy first outing for the new CEO.
No, it isn't, and they've just sort of slightly missed. So it seems a bit harsh. Actually, the shares fell much further initially when the market opened, so they've actually made up some ground. So I think we're absorbing, the detail in the statement, and it's not a bad statement, but perhaps weaker than we had expected.
Yeah. Now, obviously, the Chancellor, it's quite rare for a Chancellor to give a name check to a corporate in the budget speech, but yet he did so with AstraZeneca, and it was to do with quite a major investment in this country.
Yes, and I mean, it's a real positive. So they're investing 650 million to expand their footprint in Cambridgeshire at the Life Sciences Park, but also setting up a manufacturing hub in Liverpool. And we have to remember it was one of the leading companies for the vaccine rollout for COVID. And so this is very welcome news.
Indeed it is. And I should say to viewers, service announcement, we have AstraZeneca on our morning edition tomorrow morning, so do make sure you tune in for that. I mean, to the downside, Lucy, we obviously, as expected, got this tax on vapes. What's that done to the tobacco stocks this afternoon?
Well, very little. I mean, I think much of the budget, I mean, there have been no rabbits and there have been no surprises. So gilt markets are responding, they're slightly stronger. So we expect interest rates to come down. And, the response of the tobacco companies, it really is fairly muted. We've seen that the FTSE's up a little bit today. And I think it's just because a lot of the information that the Chancellor revealed was really well flagged in advance. There's good news out there with a sort of British ISA that's still in consultation. So we must await the detail, really.
Indeed, Lucy. I mean, what on earth consequences constitutes a British company that qualifies for this British ISA?
Well, exactly. Most of the FTSE 100 companies, they're largely overseas earners. So I think there's much to be gained by the detail. Now, whether they look further down the pecking order at the FTSE 250, which is much more domestic, that could be the answer. But it's really how it's monitoring and what qualifies for a British company. But also, interestingly, he's looking at pension funds and looking at their UK asset allocation from the perspective of how they look in Australia. But again, if they don't respond,
Lucy, I'm afraid I've got to cut you off. We're out of time, Lucy. I'm so sorry. I'll see you very soon, I hope. Thank you. That's it from me. I'm back with Business Live tomorrow in the studio. Hope you can see me then. Coming up next, it's Mark Austin with the News Hour. Thanks to everyone here at True 7 in Ipswich. See you tomorrow. Cheerio.
It's 5 o'clock. I'm Mark Austin. This is the News Hour, 60 minutes of news, analysis and interviews. We begin right now with the top stories this hour. The Chancellor cuts national insurance and boosts help for families as he vows to get the economy back on track.
A plan to grow the economy versus no plan. A plan for better public